Honorable Speaker, Madam, good afternoon. Section 49 of 1BC of Public Finance Management Act requires the accounting authority of every public entity to prepare annual financial statement and to submit them to the Auditor General and Accountant General within 2 months of the end of each financial year. This statutory obligation is a cornerstone of public financial accountability, enabling independent verification of how public funds have been managed. Honorable Speaker, Madam, non-submission of financial statement is a breach of the PFMA that compromises transparent, weakens public accountability, and undermines the constitutional mandate of Parliament to monitor and oversees the expenditure of all state institutions as provided for under Section 299 of the Constitution of Zimbabwe. Honorable Speaker, Madam, the Public Accounts Committee noted with concern that a significant number of state-owned enterprises, SOEs, and the parastatals had failed to submit annual financial statements for audit for consecutive financial years. The institution cited a non-compliance including Chitungwiza, Inguchen Hospital, Zimbabwe Defense University, the Nurses Council, New Ziana Zimbabwe United Passengers Company ZUPCO, the Zimbabwe Youth Council, Silo Foods, Zimbabwe Academic and Research Center, Denford Mines, the National Handcraft Center, the National Librarians and Domestication Center. Honorable Speaker, Madam, objectives of the inquiry. The committee accordingly exercised its oversight function by inquiring into the cause of non-compliance and proffer recommendations to ensure adherence to the statutory financial reporting, to identify and understand the root cause of delays and the non-submission of financial statement by SOEs and parastatals. Number 2, to assess the implication of such compliance and accountability, transparent and sound public financial management. 3, to make recommendations and attempt at approving timelines, compliance and quality of financial statement submitted to the Auditor General's office. Honorable Speaker, Madam, methodology. The committee exercised the Auditor General's report for the financial year ended 31 December 2024, which was tabled in Parliament on 23 July 2025, with particular attention to findings of entities that failed to submit financial statement for audit. Oral submissions were received from the accounting officers of Chitungwiza, Inguchen Hospital, Zimbabwe Defense University, the Nurses Council, New Ziana ZUPCO, and the Zimbabwe Youth Council, Silo and the Zimbabwe Academic Research Center, Denford Mines and National Handcraft Center, and the National Librarians Documentation Centers. Honorable Speaker, Madam, coming to committee findings, the Auditor General report revealed that a number of state-owned enterprises did not submit their financial statement for auditing. The National Handcraft Center and the National Librarians and Documentation Center failed to submit statement for a period of 13 years. Honorable Speaker, Madam, since 2009 to 2024. Additionally, the Zimbabwe Defense University failed to submit for 4 years, as from 2021 to 2024. Furthermore, Chitungwiza Hospitals, Denford Mines Private Limited, and the Zimbabwe Academic and Research Center were also non-compliant, having failed to submit statement for 2022, 2023, and 2024. Final, Honorable Speaker, Inguchen Center Hospitals, the Nurses Council, Silo Foods Private Limited, ZUPCO and the Zimbabwe Youth Council, New Zealand failed to submit their financial statement for 2023 and 2024. Based on evidence received from accounting officer and the Auditor General's reports, the committee identifies the following 5 principal categories of causes for non-submission of financial statements. Honorable Speaker, Madam, number 4.1, human resources constraints. Human resources constraints emerges as Human resources constraints emerges as pervasive and systematic cause of non-compliance across the institution examined. This defines manifested in the 3 forms, which are understaffing of the finance department, the employment of personnel who qualified were insufficient for the complexity of the reporting functions, and decentralization staff turnover in key finance roles. Honorable Speaker, Madam, at Inkuchen Central Hospital, the Chief Medical Officer informed the committee that the finance department operated with only 6 accounting personnel holding qualifications ranging from certificates of high national diplomas, who were responsible for managing daily financial operations and statutory reporting for a workforce of 720. This limits the department capacity to discharge its reporting obligation without depolitization statutory submission. Honorable Speaker, Madam, the Permanent Secretary for the Ministry of Primary and Secondary Education confirmed to the committee that the National Librarians and Documentation Service operated without a qualified accountant throughout the period under review. The consequence was no financial records were captured, rendering the preparation of financial statement for audit impossible for a period of 13 years. The Zimbabwe Youth Council reported that only 3 of each 13 approved financial positions were filled during the period of under review. This left a skeleton team responsible for coordination financial data across 10 provinces, resulting in a severe bottleneck in data capturing, consolidation and reporting. These constraints were further exacerbated when the finance manager department in early 2023 creating a gap in accordance to only particularly resolved months later. The National Handicraft Center operating without a board of directors from 2017 to 2024. The acting general manager for National Handicraft Center, Mr. Gwerume, submitted that this governs vacuum weakened institution oversight and accountability. Staff overtrain is key. Finance positions such as finance manager, accountant posts mean that remaining personnel were compelled to ensure incompatible duties, further degrading the quality and continuity of financial records. Denford Mine explains the frequent accountant transition between 2023 and 2024, resulting in the loss of institutional memory and disrupt of the audit trail, which slowly and obligation new personnel. Honorable Speaker, Madam, committee observations. The committee observed that human resources deficiency continued as a primary and systematic cause of the failure to submit financial statement for auditing by multiple institutions. This capacity crisis manifested in understaffing, the deployment of underqualified personnel in key financial roles, destabilizing staff turnover, in some cases a complete absence of oversight due to vacant boards. Honorable Speaker, Madam, committee recommendations. The Treasury, the Public Service Commission, and relevant line ministries by 31 August 2026 should conduct a human resources audit on non-compliance on SOSE's finance department and implement a mandatory time-bound plan to fill critical vacancies with appropriate qualified personnel. Number 2, Honorable Speaker, ma'am, Line Ministry should by 30 June 2026 ensure the immediate and lawful constitution of boards of directors for all SOEs currently without boards. 3, the Minister of Primary and Secondary Education must table with the committee within 30 days of adopting of the report a full account of how the National Librarians and Documentation Service operated for 13 years without a qualified accountant, including an explanation of how this position was supervised by the ministry without that period. Financial management system failures, Honorable Speaker, Madam 4.2. The inadequate, obsolete, and in some of cases, complete absence of functional financial management system was identified as a cause of non-business across several SOEs. This system fails undermine the liability of financial data, destroying audit trail, and in certain instances, resulting in the permanent loss of financial records in all these SOEs. The chief officer at Inguchen Central Hospital submitted that the hospital has parastatal evaluation accounting software license elapsed in 2021 following a non-payment, forcing the finance department to revert to entire manual processes. This substantial increased the time required to prepare financial statements whenever they are doing their in manual. Chitumbwiza Central Hospital experienced a crash of its SAP accounting system in 2022 that resulted in the loss of vital financial data, including debtors, creditors, and cash book. This data loss exposes financial weaknesses in the hospital internal controls, including the absence of system backups and an over license and unsynchronous annual access records as a fallback. Furthermore, the National Handicraft Center operated without an accounting system throughout the period under review. Its records were maintained on manual worksheets and financial statements prepared for the years 2009 to 2018 were lost following a computer crash, with no backups having been maintained. Honorable Speaker, Madam, the Zimbabwe Defense University similar reliable entire on annual system for accounting data capture, which undermines both the financial and the verification of its financial records. ZUPCO revised its data capture module with ERP system to record financial transactions at the individual vehicles level, requiring the daily posting of approximately 1,426 way bills across the depots. While the reconfiguration was intended to enhance operations performance, monitoring it resulting in a delay of about 15 months in finalization of the 2022 financial year accounting accounts. ZUPCO subsequently undertook a further ERP upgrade of accommodate multiple currency and branch accounting, which introduced further configuration timelines and contribute to continued delay in financial reporting for 2023 and 2024 financial year. Honorable Speaker, the Next Council of Zimbabwe highlighted that a new accounting system was introduced in 2023, whose adoption slowly reported as staff adjusted to the platform, compounded by the limited capacity to manage both the transactions and existing reporting backlog concurrently. The Chief Executive Officer of Silo Industries, Mr. Dewey, informed the committee that Silo Food Industries operated on a shared SAP AI system belongs to the Grain Marketing Board, over which it had no independent control and only intermediate access. This depends on an extra entity system over which side of foods no governance left it unable to access complete and timely financial data, contributing directly to its failure to finalize financial statement for 2023 and 2024. Honorable Speaker, Madam. Committee observations. The committee observed that the absence of any data backup protocols lands on obsolete. Dissatisfaction on non-existence financial management system is a major enabler of non-compliance. The lapse of software licenses, unlimited systems crash resulting in a data loss, complete lines on manual process at multiple entities demonstrate a systematic failure of basic financial infrastructure across the SOEs sector. Honorable Speaker, Madam. New system adoption and ERP upgrades at ZUPCO and the Nurses Council were undertaken without adequate parallel running arrangement or resourcing to ensure that statutory deadlines could still be met during the transaction period. Committee recommendation, Honorable Speaker, Madam. All SOEs should, by 31 August 2026, confirm to the Accounting General in writing that their accounting systems are licensed, operational, and maintained by qualified staff. Where a license is elapsed or a system is non-functional, a recommendation timeline should be submitted. Number 2, Honorable Speaker, Madam. The Accounting General should issue a directive requiring all SOEs to maintain verification of site data, backups of all financial records, updated at minimum on a weekly basis. Complying with this directive must be verified by internal audit. The Treasurer should immediately direct the Grain Marketing Board to provide silo foods industry with dedicated independent access to its own financial data on the SAS AI system, or alternative fund the immigrant of silo food industry to its own standalone financial management system within 2026 financial year than to share. Honorable Speaker, Madam, coming to economic and financial constraints, several entities demonstrated that financial constraints arising from inadequate government funding, decline on revenue streams, and cumulative effects of Zimbabwe's high inflation environment. The National Handicraft Center presented evidence that although financial statements were prepared for the years 2009 to 2018, the entity could not submit their audit because the association audit costs were unfavorable given the prevailing financial constrained environment. In addition, the company did not receive any funding supporting until late 2024, which further undermines its capacity to sustain proper financial reporting and meeting statutory audit requirements. Coming to News, Yana cited financial constraint as the primary cause of its failure to submit 2022 and the 2023 and 2024 financial statement for audit. The Executive Secretary, Mr. Mungoshi, informed the committee that the entire experienced delays in receiving government support had only received a fraction of its treasury allocation for 2025, leaving it unable to meet its operational cost and salary obligations, resulting in the accumulation of arrears. Honorable Speaker, Madam, while the 2023 and 2024 financial statements had been prepared, they remained pending audit due to funding constraints, and the 2020 audit was still being finalized at the time of committee's inquiry. The committee further noted that News Yana's financial challenges were compounded by the low business activities reduced uptake of advertising space, signified staff shortages, which collectively resulted in loss of businesses. While the agents had transactioned from print to digital media, the shift did not yet yield acceptable financial returns. Honorable Speaker, Madam, coming to committee observations, the inability to afford audit costs affects institution funding model that is structural and unsustainable and requires urgent policy attention. Audit fees constant and predictable requirement in statutory expenditure item. The failure to ring-fence funding for audit costs from allocation budgets indicates a gap in financial planning and treasury oversight of grant conditions. Honorable Speaker, Madam. Hyper-infrastructure condition of do not exist the statutory obligation to submit financial statements. Entities operating in difficult economic conditions requires proactive support mechanisms, not retrospective condonations. Honorable Speaker, Madam, committee recommendation. The Account General should, by 31 August 2026, develop a framework for use by Office of the Auditor General to determine SOEs that cannot afford private audit that the Auditor General should audit. This will ensure that ability to pay private auditor fees does not become a justification for non-submission. All SOEs receiving treasury grants must budget and ring-fence funds for audit fees from the grant. Honorable Speaker, Madam. Coming to transactions, complicity, and international financial reporting standard compliance. Honorable Speaker, Madam. In 2014, ZANET was designated by the government of Zimbabwe to acquire 60% shareholding in Telso Zimbabwe Limited from Viped.com Netherlands at a cost of US 40 million. As part of the implementation of the indigenization and economic empowerment policy, the financial complexity of this acquisition, which involved multiple government ministries, departments, and agencies, created significant challenges for ZANET in preparation of compliance financial statement. Honorable Speaker, Madam, the involvement of multiple government entities and involved accounting treatment of the TZL shareholdings resulted in an incomplete financial statement that did not meet IFRS requirements. This position was eventually resolved that through an act of statutory instrument 156 of 2023, temporary measures, investment laws amendment, regulation which translate the TZL shares to the Mutapa investments in September 2023. However, this resolution came years after the non-submission had begun, leaving a multi-year gap in ZANET statutory reporting record. Honorable Speaker, Madam, committee observations. The dedicated long delay in resolving the ZANET position through legislative intervention SI 156 of 2023 demonstrated a failure of intergovernmental coordination and disregard for the downstream financial reporting consequence of complicity policy transactions. The absence of the specific IFRS technical support mechanism for SOEs that are assigned complicity transactions by government represent a systematic gap in public financial management support framework. Honorable Speaker, Madam. Committee recommendation. The Accounting General should deploy a dedicated IFRS technical advice services accessibility to all SOEs to provide guidance on complicit accounting issues, particularly where complicity, government policy, transaction-related measures and recognition uncertainties. The cost of this service should be done central rather than individual SOEs. Honorable Speaker, Madam. The external factors. The committee acknowledges that certain external factors contributed to the reporting delays, particularly that in Ngucheni Hospital, the COVID-19 pandemic resulted in reducing working hours and restricted operation flexibility during the period of 2019 to 2021, exacerbating pre-existing backlogs in the hospital financial reporting and audit processes. Honorable Speaker, Madam, the committee further noted that equally nature of audit process whereby audited financial statement for a subsequent years cannot ordinarily be submitted until preceding years audit has been concluded, created a compounding effect of Ngucheni Hospital. The audit firms engaged over the years include PNA, PNA Zimbabwe, and KFN International took prolonged period of finalized audits. In some instances, required adjustment to reports dating as far as 2013, preventing the progress of a subsequent financial year through the audit cycle. These cascading effects automatically result in the non-submission of financial statement for the year 2022 and 2024 financial year. Honorable Speaker, Madam. Committee observations. The absence of formal reporting mechanism represents a governance gap that allowed Ngucheni's backlog to grow unchecked for years. Prolonged the duration of audit by successive audit firms of Ngucheni Central Hospital with the reports backdated to 2013, still being required years later, raise questions about audit quality management, the appropriate of the audit firms, engagement teams, and adequate of oversight by the Auditor General's office over the quality and the timelines of private sector auditors, including conducting public entity audits. Honorable Speaker, Madam, committee recommendation: the PFMA should be amended or a subsequent legislation should be enacted to provide a formal mechanism through which SOS and MDAs may apply for extension of statutory reporting deadline in defined circumstances of genuine external disruption. Such application must access determined by the accountant general, with a copy provided to relevant public accounts committee. The extension must not be granted retrogressive. Honorable Speaker, Madam. The Auditor General must establish a performance monitoring framework for private sectors, audit firms conducting public entity audits under the Auditor General's mandate, including enforcement timelines for the delivery of audit reports, accelerating procedures when those timelines are not met. Honorable Speaker, Madam, 4.5, corrective measures and current compliance progress. In response to the committee inquiry, several state-owned enterprises provided accounts of corrective measures taken since the non-compliance was formally identified. The committee acknowledges this initiative as corrective first step, while noting that the credibility of reported progress be verified through independent confirmation by the Auditor General. Committee observations. Honorable Speaker, Madam. The corrective measures reported by most institutions reflect a genuine, encouraging effort following the committee's engagement. The completion of backlog clearance by the Zimbabwe Youth Council, the active auditing engagement at Ngucheni and ZUPCO are noted. The Zimbabwe Defense Invest commitment to submit all outstanding financial statements for 2019 to 2020 23 by 31 August 2025 is noted. The corrective measures, while measures are largely reactive response to years of accumulative non-compliance rather than preventing it, the committee notes that absence in most institutions of forward-looking governance framework that would prevent a recurrence non-immediate backlogs has been cleared. Committee recommendations, Honorable Speaker, Madam. Accountant General, within 30 days of the adoption of this report, confirmed the committee the current status of corrective measures at each SOEs, including board composition, financial staffing, and system operations. Honorable Speaker, Madam. Any SOEs that fails to comply with the timelines set in the Treasury minutes without providing written justification to the Accounting General should be referred by the committee to the relevant law enforcement and prosecution authorities for consideration of adoption action under the PFMA is going to be implemented. In conclusion, Honorable Speaker, Madam, the non-submission of financial statement by state-owned enterprises and parastatals for the multiple consecutive financial years represent a serious and systematic failure of public financial accountability in SOEs sectors. In the most extreme cases, the National Handicraft Center and the National Library and Documentation Services, this failure has extended for 13 years, denying Parliament, the public and oversight bodies any meaningful insight into the stewardship of public resources in these institutions. I thank you, Honorable Speaker, Madam.
Thank you. The question before the House is a motion by Honorable Maposa that this House considers and adopts the report of the Public Accounts Committee on non-compliance with regards to submissions of the financial statements to the Auditor General by some state-owned enterprises and parastatals in the 2024 Auditor General's reports, SC 12 of 2026. Is there any debate? I call upon